Welcome to the Fiscal Physical Podcast. Join us each week as we sit down with the founder of Alchemy Wealth Management and author of Your Fiscal Physical, Ryan Nelson. Tune in to gain valuable insights and practical tips as we simplify complex financial concepts into digestible lessons. From budgeting to retirement planning, this podcast is your go-to resource for mastering financial literacy.
Welcome, everybody, to this week's episode of the Fiscal Physical Podcast. My name, as always, is Aaron, and as always, I'm joined by Ryan Nelson, the founder of Alchemy Wealth Management, a published author. Find his book on Amazon. Highly recommend. I'm actually looking at it right now, too. So, good read. Definitely something to a quick read, too. It's relatively digestible for pretty much everybody of every skill level of reading. So definitely check that out. And Ryan, how are you? I guess I should start with that. You're sitting right there.
I am doing well. How are you doing?
I'm doing well, my man. You know, another beautiful day here in Reno, Nevada, is where we call home. So hopefully wherever you might be listening from, whether it be Reno, Sacramento, Seattle, Thailand, whoever you guys are tuning in at, we appreciate you. And today, Ryan, we're going to talk about understanding your paycheck, breaking down the paycheck. So I'll preface that a little bit with hopefully everybody's gotten a paycheck who's listening to this at some point or has seen a paycheck in some regard. But today we're going to break down what actually a paycheck normally consists of, maybe pull back the curtain. I know when I first got my first paycheck, I was thinking back when I was writing this episode about when was the first time I got a paycheck, and I think I was 16 or 17. I want to say something like that. And I remember getting it and being like, "Well, where's all my money?" First off, and then two, I was like, "What are all these items? What am I doing with this here?" So, some people still might have that effect today, and so we're hopefully going to peek behind the curtain of what actually goes into a paycheck and what people might end up paying, and hopefully you guys will learn something. But Ryan, go ahead and take over, my man.
Let's do it. So the two terms you may hear most likely or most often around pay is like gross pay and net pay. And I find those two terms to get misused pretty often and confused. So let's start by clarifying that. Sure. So gross pay is effectively how much you're earning, how much your employer is telling you earning. So if it's your salary, it's your salary. If you're making $100,000 a year, your gross pay is $100,000 a year. If you're making $20 an hour and you worked 40 hours that week, $20 times 40 hours is $800. Your gross pay that week was $800. So gross pay is the total amount you've earned. Now, to your point, there's going to be a bunch of these deductions and reductions and things taken off of your paycheck. And, if we just said somebody earns $800 in a week, when they see their paycheck or it actually hit their bank account, $800 is not hitting their bank account.
Right.
Some amount less than that is hitting their bank account, right? So what's hitting their bank account, we call that their net pay.
Okay.
So gross pay is going to be the big number, the front end before any of these deductions come out. The net pay is going to be sort of the final amount that actually net out after you net out all these differences. It's what actually hits their bank account. So gross pay versus net pay. Now, the difference between those two is all these deductions. So let's start diving into those. So one, federal income tax. That is just money paid to the IRS based on your income, right? So you will, in your W-4, you will pick sort of how many, you'll pick your elections, and you have a little bit of control over there about how much will be deducted and sent to the IRS on your behalf. So you can adjust your withholdings to try to increase or decrease how much you're paying to the IRS on the front end. It won't change at all how much you pay to them at the end of the year, right? But it can help sort of adjust throughout the year to try to pay up the approximately right amount so that at the end of the year, you don't owe a ton or get a huge refund back.
Makes sense. Yep.
But so federal income tax, obviously that's a big amount it's withheld by your employer and sent directly to the IRS. That's one of the big pieces that come off, right?
Sure. Oh yeah. That's a big one.
Yep. Then
Sam gets his.
Yeah. Then there's state income tax. It operates very, very similar to the federal income tax, except it's going to be state specific. So you and I, right, we live here in Nevada. The state income tax is
0.
Yeah, it's a nice percentage. I like it. As far as taxes go, it's a pretty attractive one, right?
It is, yes.
So not every state obviously has state income tax. We are 2 examples of people who do not have state income tax, but most states do have state income tax. So that just gets deducted. The employer deducts that from their pay, sends that to the state, similar to how the federal one was withheld and sent to the IRS. This is going to do the same. It's going to be deducted from your paycheck and sent to your state by your employer. This can get a little confusing. So like, for instance, I lived down back when I was doing engineering. I lived in Vegas, but I actually worked in California.
Oh, that's right. Yeah.
And so I was even though I lived in Nevada, I spent all of my time in Nevada. I drove like 5 miles into California to work.
Yeah.
So I used like 5 miles of California state highway. And I still had to pay California state income tax despite living in Nevada, right? So this one can get a little more complicated if you're living, same would be true if you're living in California but working in Nevada. California will still get their state income tax. So something just to pay attention to there. But
definitely.
Then on top of that, there's like FICA, Social Security and Medicare taxes. So FICA is the combination of Social Security and Medicare. And this, we talked in a previous episode about the self-employment tax.
Right. Yep.
That's effectively this. Just as a normal employer, you're paying half and your employer is paying half, right? So you're paying 7.65% and your employer is paying 7.65%. So again, if we take that employee who is on a salary at $100,000, they're going to owe 7.65% of $100,000. That's going to be $7,650 that would be owed to all FICA, Social Security, and Medicare to cover all of these different taxes. And then your employer would also put that in on your behalf as well, right? So if you're self-employed, you'd be paying both sides of it, so over 15%. But if you're a W-2 employee, you'd only be paying half of it, the 7.65%.
Gotcha. Yep.
But that's another deduction, right? Then you have health insurance premiums.
Sure.
So a lot of employers will be offering health insurance. Oftentimes, you're part of their group health insurance policy. And so maybe there's potential that they're potentially subsidizing it or getting you a better deal, but you're still often paying something for those health benefits. And that is typically going to get deducted directly from your paycheck, right? So whatever plan you end up choosing, that could also include dental and vision as well. So normal medical, dental, vision. That is often going to be pre-taxed. So that would come off before you determine how much you're being taxed. But nonetheless, it's again one of those things that's being deducted from your paycheck.
Yeah. Oh yeah, these are adding up.
Yeah, I know, right? We've been talking for a while here.
Yeah.
And then on top of this, there's 401k contributions.
Sure. Oh yeah.
So you may,
good 401k.
Yep. Yeah. So you may elect to contribute to your 401k. There's different types of 401ks. There's like pre-tax and there's Roth. And so there's pre-tax and after-tax 401k contributions. And so they may sort of get deducted at a different stage, be either before taxes or after taxes. But nonetheless, this is, again, coming off of your paycheck before the money hits your bank account, right? So this could either lower your taxable income depending on which one you're doing. And you could, again, a benefit here is you might be getting an employer match, which would sort of be getting thrown into your 401k as well, coming directly from your employer, which is nice. But so any sort of business retirement plan is typically going to be deducted from your paycheck, again, before it hits your bank account. Then, on top of that, you may be contributing to an FSA or an HSA.
Oh.
So we had some podcasts about that, flexible spending accounts and health savings accounts. Remember, the FSA, the flexible spending account, was kind of that use it or lose it account. The HSA, or the health savings account, that's for people with the high deductible healthcare plans, and that's where they can invest the money in there, and it can roll over year after year.
Triple, was it called triple
tax
advantage?
Benefit.
Something like that. Yeah.
Yep. So both the HSA and FSA, those contributions are typically going to be deducted. Not necessarily, but oftentimes, if it's an employer-sponsored plan, it's going to be deducted from your paycheck and be contributed to your FSA or HSA. Again, those are both going to be pre-tax, but still deducted from your paycheck. And then in addition to all of that, there could be other potential, typically benefits, but like union dues. So if you're part of a union, often that's the dues are deducted from your paycheck. some companies have like gym memberships and stuff that you can run through your paycheck, and there'd be some reasons why you want to. You can potentially get it pre-tax and stuff, but you might have like gym membership costs deducted from your paycheck. Things like parking or here we don't really have it, but there's some commuter benefits typically for bigger cities. And then on top of all of this, some employees will offer optional ESPPs. That stands for Employee Stock Purchase Plan.
Oh, okay.
And that'd be a voluntary benefit you might be participating in. We should do an episode.
Actually, I was going to write that down. Of like, hey, that sounds like that's a good episode.
Yeah, absolutely. Yeah, we'll have to do that in a coming episode. Those are good plans to talk about. But either way, this is another thing that if you choose to participate in the ESPP, Employee Stock Purchase Plan, is another thing that's being deducted from your paycheck before it hits your bank account, right? And then also you could have things like wage garnishments, right? So your wages could literally be getting garnished from your paycheck before it hits your bank account. And so I'm confident that I probably even missed some things here.
Sure.
Right?
Oh, yeah.
But in summary, you have your big things, your federal income tax, you have your state income tax, you have your FICA, Social Security, Medicare, costs, you have your health insurance premiums, 401k contributions, FSA or HSA contributions, union dues, gym memberships, all of those sort of, one-off things. And again, after you subtract all of that, what's left over and hit your bank account, that's your net pay. So again, you have your gross pay, that was your total pay. You take out all of these little small to large expenses that end up adding up. Whatever is left over is your net pay. That's what actually hits your bank account. So yeah, it is important to sort of understand all these and get a feel for what you actually owe. And again, circling back to on one of our more recent episodes, right? We talked about entrepreneurship. If you're an entrepreneur, right? If you're a W-2 employee and you're receiving your W-2, your paycheck, all of this is sort of being deducted from it automatically.
Right.
And then you just receive your net pay to your bank, and you don't have to necessarily worry about this. If you're your own business owner and you're not getting a W-2 paycheck, you're responsible for taking care of all of this on your own, making sure that the money's going to the right place, to either the federal government in the IRS, to the state government, to Medicare, to your 401k, to your HSA, right? You're responsible for making sure this all comes out, it gets paid to the appropriate place, people at the appropriate times, right? So it is important to, I think, know like where all your money's going, really, right?
Oh, yeah.
It also, though, you should have the capacity to be able to spot errors. So nobody's payroll system is perfect. And most people can probably think of an example in the past or know somebody where their paycheck was wrong and something was happening. And if you don't understand, what deductions there should be, then it would be hard for you to kind of check and make sure that you're getting paid right? So I think there's some value in doing some research and figuring out more about these deductions and making sure which ones apply to you and making sure that your pay is right. And you have some obligation to make sure some of these are right. So even if the error is in your benefit and you're like, oh, I'm getting paid more.
I'm getting extra.
That may seem good on the front end, but there's going to be some negative repercussions on the back end. So even that you might want to catch as early as possible, right? Yep. And so, I think it just helps encourage sort of that. It helps avoid any surprises at the end of the year if you know sort of the background of all of this, and it helps sort of encourage this proactive, like future looking planning.
No, I think that's super well broken down, and you really hit on the point that I was hoping to accomplish with this is being able to kind of understand of where that money's going, because you think about it, like if you're making $100,000, we love round math here.
Yep.
You get 26 paychecks a year. If you get paid biweekly, you're roughly just under like $4,000 a paycheck or something like that.
Sure.
So you're like, okay, cool. I'm making $100,000. I'm gonna make $4,000 a paycheck. You start planning for that, if you will, and then you're like, oh, wait a minute. I'm actually only getting $2,500 a paycheck because of all these different things. Like, the idea of like, hey, I'm making this amount of money. It's like, cool, but what are you actually making into it? And I think that's the big thing for budgeting or planning. And I always think that it's an interesting thing when you go to, we talked about buying a house on the last episode, and you go to get pre-qualified for these certain things, and they ask what your annual salary is in these certain things, and you're like, oh, cool, I make $100,000, and they're like, oh, awesome, great. You can afford XYZ. It's like, well, actually, I don't make $100,000. Right? That goes into specific. That doesn't hit my bank account.
Right?
Does it go into certain things that I can use or assets or whatever? Sure, but just having that in mind of like, it's not, you're going to get these things deducted. Once again, this is if you're employed and you're actually getting a physical paycheck. The second piece is just thinking about equating it. Once again, you mentioned to the home or the entrepreneur place of all those different things that in my head was just kind of spinning, thinking about these. I'm like, holy cow, you got to cover all of these yourself. Like, wow. Like that's incredible. But the big one too is the air spotting. I think that like being able to at least be knowledgeable about when you see these things that are on your check, you see this, you see, take OASDI or whatever. You're like, what the heck does that mean? Like, and I don't even know if I got that acronym right, but like, you're like seeing all these different things and one, understanding like why they're there, and then also understanding like, cool, I'm paying into this, got to make sure that that's there. So I think it's all a big, it's an important piece to know exactly like. Might not be very sexy to go look at your paycheck every week and like break it down, but I think it's a good thing to be on top of and at least be aware of what's coming out and why that's coming out specifically.
Yep. So let's do a little quick trivia.
Sure.
So the OASDI. So that is again one of the. I kind of glossed over it in our initial thing, but that is one of the things that will be withheld. Ooh. So OASDI. What do you think that stands for?
Oh boy. OASDI. I had
to Google this. I didn't even know off the top.
I have no idea even what any of those letters would mean. Like I can't even like the occupational. Like
okay, there's
occupational advocacy, security, disability insurance.
You got 2 words right.
All right, yeah.
So it stands for Old Age Survivors and Disability Insurance.
Okay.
So OASDI is Social Security.
Okay.
There's a reason why we call it Social Security, because OASDI doesn't roll off the tongue, and Old Age Survivors and Disability Insurance certainly doesn't roll off the tongue. But so anytime you see like OASDI on your paycheck, that's just Social Security.
Good to know.
Yeah. And Social Security is one of the things that makes up FICA tax, and FICA stands for Federal Insurance and Contribution Act. So you take Social Security and Medicare, that makes up FICA. So Medicare and OASDI make up FICA. So it's a little bit of alphabet soup there.
Yeah, it is.
So yeah, it can be a little bit, when you're looking at your paycheck, it could be maybe a little overwhelming, but hopefully maybe this empowers you to have a little more knowledge there.
Yeah, absolutely. And plus, like we've mentioned on previous podcasts, the resources that people have out there, and being able to, hopefully just call your financial advisor and be like, hey, what does this mean? Because I know if I sent you a copy of my paycheck, Ryan, you'd be like, that means this means that. Or you'd ask somebody and they'd figure it out for sure. So just being aware, being cognizant, being financially literate when it comes to actually where your money's coming from, I think can be a huge benefit and just a peace of mind too. Because if you don't know what you don't know, we've talked about that before, and people are sometimes scared to look stupid for asking these questions about what does OASDI mean? Right. Like, oh, you don't know what that means? No.
Nobody does.
Nobody does, but it's provocative. So I think that's an important piece to just kind of plug to make sure, hey, if you don't know, ask your employer. Your employer should be able to point you in the right direction of what this actually means. Why are they taking this money out? So big piece there. But awesome, Ryan. Anything else you want to do before we move to the personal section?
No, that sounds great.
Awesome. Sounds good, man. Appreciate it. Thank you, everybody. We'll be right back on the other side of this.
And now, to put the personal in personal finance.
Welcome back, everybody, to this side of the Fiscal Physical podcast. Still here with Ryan Nelson. And Ryan, I have a great question for you today. I was really thinking about this. I laid in bed the other night, thinking about my answer. So I'm curious what you're going to say here. So my question to you is, what is your ideal Saturday? Paint me a picture. If you could choose anything or things to do on a Saturday, what would that consist of?
So Saturday specifically, huh?
Well, I say Saturday because this is my logic on it. Friday, you're probably working on a Friday.
Sure.
Saturday, you have that day off. You don't have to go back to work the next day. So you still, relatively speaking or whatever, but you have that extra day to either recover or spend it doing whatever you want to do. This is your perfect Saturday. What would you anticipate that being?
Well, what I was originally thinking was If this was a Sunday, my perfect Sunday would be like being in Green Bay,
Sure.
Watching going to Lambeau Field and watching the Packers play a football game.
That's
It's just
a good
so
point.
fun. The tailgating beforehand, the game itself, the hanging out afterwards. It's just all so fun. And so, but this was Saturday specifically, and the Packers play on Sunday.
Sure,
it makes it
sure.
a little tricky.
It does.
But during the playoffs, they play on both Saturdays and Sundays.
They do.
So I thought that'd be pretty cool to do on a playoff game.
Sure.
It's got to be even cooler, right? So I think a playoff game in Green Bay, going to Lambeau would probably be even more fun. So that'd probably be my answer. But with that being said, I don't know if that's cheating or not. So I've been getting into golf. I think just going and playing around a golf is a lot of fun as well. So if I'm not able to travel to Green Bay, I'll say golfing here in town. What about you?
I love it. Have you ever been to a playoff game yet? I don't think you have.
No, I haven't.
Cool. I was just checking to see if
Yeah.
that was it. But for me, man, so it's funny that you think about like you're like, cool. This is how everybody's answer is going to be different to that. But I planned this out. I was like, cool. My perfect Saturday. I wake up in the morning. I go out to eat for breakfast. I have a nice chicken fried steak. I come back and I hang out at my house. I'm just chilling, not doing much.
Yeah.
And then I have a barbecue. I host a barbecue where I have 10 of my closest friends over. We get into
Not 11.
Not
10.
11, 10.
Not 9.
No.
10.
10 is the specific number. I've done the math. Otherwise, it gets too crowded. And I have 10 people over. We end up barbecuing. We're playing lawn games. We're tossing corn. We're imbibing. We're just hanging out, enjoying a beautiful Saturday. This Saturday happens to be about 75 to 80 degrees out, too. So not too hot, but just hot enough. And then that evening, we attend some sort of sporting event.
Nice.
I'm right there with you. Like, I'm like, it can be just something, we hit a UNR football game or we go to a basketball game or something like that. Really squeeze in all the things that I like to do in one day, and then I can just sleep all day Sunday.
Nice.
But
I like it.
as a father and a husband and just a busy person, I don't have a lot of time to do all that.
Sure.
It'd be pretty tough to squeeze that in like on my own dime. But I think that would be my perfect Saturday, if you will.
Let's get one on the calendar.
I think it would be that'd be a very worthy cause to undertake. So hopefully sometime in the future I'll circle back to this and be like, I had the perfect Saturday.
Yeah.
So we could talk about that then. But awesome, Ryan. Well, as always, appreciate it, my man. Thanks everybody for tuning in, listening. Hopefully you guys learned something. Hopefully it got you thinking about things. As always, send your questions to us. We'd love them to be sent in, text, email us at podcast@alchemywealth.com. Whatever method you want to send it to us, we'd love to cover it for sure. So Ryan, I'll turn it over to you to play us out.
As always, stay the course.
Thank you for joining us for the Fiscal Physical Podcast. Until next time, happy listening. And as always, stay the course. If you have a question or topic suggestions, please email us at podcast@alchemywealth.com. If you enjoyed today's discussion, subscribe to the podcast to ensure you never miss an episode. And consider leaving us a rating and review on your favorite platform. This helps other listeners like you find the show. For more resources, you can visit Alchemy Wealth Management's website at www.alchemywealth.com or find your Fiscal Physical, the book, on Amazon. We'd be remiss if we didn't mention that personal finance is just that, personal. Please don't take anything we say as advice. The preceding content is for informational and entertainment purposes only. It's not an offer or a solicitation, nor should it be construed or relied upon for tax, legal, or investment advice. It doesn't consider your personal financial situation or objectives and may not be suitable for you.